So the topic and thought on everyone's mind at the moment is what's going to happen on the 23rd of June, the referendum. Will it be £500 million of additional cost, or will it be freedom from unnecessary and burdensome legislation, red tape and so on? Well, we're here to look at the facts, not the rhetoric, and try and decipher what really will happen, whether we vote in or out, what will happen to UK in terms of energy on the 24th of June. Well, we have to realise we're part of a global energy market. The EU itself imports 90% of its crude oil requirements and over 2/3 of its natural gas requirements from outside of Europe. So it stands to reason that worldwide events are going to impact those prices. Demand in China had a massive impact on prices here in the UK. US shale gas revolution had a huge impact on the prices here in the UK. Tension in the Ukraine had an impact on prices here in the UK. All of these events happened outside of the EU but had an impact on our energy prices. So we're not alone. We have to be part of this worldwide union that actually impacts all of our energy prices. Well, we're part of the internal energy market at the moment that allows us to trade cross-border. Norway, not part of the European Union, are also part of this internal energy market with their interconnector that comes into the UK. So physically, what's going to change, whether we vote in or out? Absolutely nothing. Would it affect the trading arrangements? Well, that is a question. If we were to leave the union, we wouldn't necessarily have to leave the internal energy market or the energy union. That could be negotiated separately. If we were to leave that energy union, then that's where there could be increased costs in terms of lower liquidity, because we couldn't see all of the counterparties over in Europe to trade energy with. That could have a significant impact. That's where this £500 million figure comes from in terms of increased costs. But is that really as a result of exiting the European Union, or actually something deeper, exiting the internal energy market, which actually isn't what we're voting for on the 23rd of June? Energy prices will probably go up if we were to vote exit. But I'm actually talking about in the very, very near term. Because actually what's likely to happen if we were to vote exit is there will be an impact on the pound, the exchange rate. We trade energy in either euros or dollars, therefore immediately any wobble in the pound would have a big impact on the energy prices. However, we're talking about the very, very near term, day ahead, week ahead perhaps. Those are the kind of prices that will be affected. It'll be a wobble in the pound. It's not really a fundamental rebasing and changing of the fundamentals that affect the energy price here in the UK. Well, in terms of energy policy, we are bound at the moment by the European Union's commitment to reduce energy and carbon footprint. However, actually the UK has gone even further. So we're not beholden to the EU targets, we've actually chosen to go beyond that. The UK government is committed to close coal plants by the middle of the next decade. We're committed to zero carbon emissions by 2050. We've got the carbon floor price that actually supports our price for carbon emissions trading certificates higher than those for the EU ETS. So all of our commitments actually go above and beyond what is required by European law. So an exit from Europe, would it mean that we'd rein back our aspirations? Probably not. Having set those aspirations even higher than European targets already, probably means that there will be very little change. Well, the government has already committed to a review of the entire energy tax landscape, including ESOS. So ESOS in its current form is already under question as to whether it's the right and effective manner. So in or out, it won't change that review. The review will actually probably bring together all of the reporting requirements into a single reporting suite that will cover ESOS and other climate change obligations. Well, the interconnectors are an absolutely essential part of our fuel mix here in the UK. We rely on those interconnectors to meet our peak demand. Those interconnectors flow based on price signals. If the price is right in the UK, then energy will flow. Of course, we've already discussed how energy prices are impacted by worldwide events, not just events here in UK or Europe. So nothing will change whether we vote in or out in terms of those interconnectors. What may change though is the climate for investment. The UK requires investments of around £19 billion per year each and every year until 2020. What do investors require? Investors require stability. That's the big question mark. If we were to vote an exit of the European Union, what would that mean for investors? Would investors be prepared to invest their money in plants and assets within the UK? It could well slow down any investment, and that unfortunately is something that we don't have time for. These assets take a considerable amount of time to plan and build. So investments have to start flowing into our energy infrastructure sooner rather than later. If we're to vote out, it could delay it. A vote to stay in could free up some of those investments. Well, I said at the start of this isn't a plea for votes one way or the other. Actually, whether we're in or out, we can't vote out of the global economy. That is what seriously impacts our energy prices here in the UK. When we wake up on the 24th of June, whether we voted in or out, there probably won't be fundamentally any difference to our energy prices here in the UK. What we have to do is make sure the UK is the best place for somebody to choose to invest their money in plants and assets. So whether we vote in or out, what we really need is a period of stability to encourage those inward investments.